So now that we have our long and short stops, we can check if we have an entry signal. If we have an entry signal, we can calculate our take profit based on our stop loss distance, and we can start running this system through the strategy tester. So before we do that, we need to prepare a bunch of persistent variables that are going to save the open trades stop loss, the first take profit, and the second take profit. Now, stop distance, we don't really need stop distance to be saved. We only need these three variables. So trade stop, trade target 1, and trade target 2. These will all be overwritten with the current trade's stop loss price and take profit prices, because there were two targets. Right, so now that we have that, there's one more filter we need to get in our script, and that is our EMA filter, the how many bars close above or below the moving average. So here I'm declaring two integer values or whole number values, bars above MA and bars below MA. And then we loop over the past 5 bars and we add up how many bars closed below and how many bars closed above the EMA value over those past 5 bars. And then we can use these two variables here to eliminate any trades that had more than 1 bar or more than whatever this is set to, 1 by default. If more than this number of bars closed above or below the MA, the trade setup is invalidated. That removes a lot of noise from the system from when price action is trading really closely to the MA, or in other words, consolidating. This system doesn't work well during consolidation, during sideways markets, and so this is one way to sort of mitigate that issue. There are other ways, but this is the simplest way I could think of that isn't going to overcomplicate the script for today's lesson, because it's already going to be a particularly long lesson. So now we have everything we need in order to determine whether or not we have a valid long or short trade. And that's what we do next. I'll copy this code over and explain what I'm doing. I'm combining all of my signal filters. So everything we've done so far gets combined into long trade and short trade. We check if we have a long signal and the bars counted below our 200 moving average is less than or equal to however many bars we've set this to, and we are flat, so we don't have any positions open. So our position size will be set to 0. Strategy.position size will be set to 0 whenever we have no contracts open. If we are long, this will be a positive number. If we are short, this will be a negative number. So now we have everything we need in order to start entering our positions. There we go, that appears to work fine. So for Forex markets, now before we continue with this video, I just want to quickly mention that this code here, I discover later in the lesson that this code doesn't actually work the way I want it to, at least not on yen pairs. It works on dollar-based pairs like euro, dollar, and that sort of thing. For some reason, it doesn't work on yen pairs. I haven't figured out how to get it to work properly yet. So just ignore this code here and focus on this code here. This is the code we'll be using to enter our positions later on in the lesson. Sorry for any confusion this causes. I'll explain this in more detail towards the end of the lesson. And then the next thing we can do is the same thing for short trades. So I can also copy this if statement down here. So this is exactly the same as our long trades, but in the opposite direction, obviously. But we're doing exactly the same thing here. We're resetting all of our trade variables to NA. Now, the next thing we need to do is calculate our stops and targets once a position is entered. So I'll start with long trades first and explain this code. So once we've entered a long trade, this next bit of code will execute. So once we've entered, strategy.entry has put us into a long trade. So our position size is greater than 0 and our trade stop is NA. So we've reset our trade stop to NA. If these two conditions are met, we're in a long trade without a stop loss. We need to specify our stop loss. To do that, we set our trade stop variable to long stop, and that should be on the current bar, not the previous bar. So we set trade stop to long stop. Now stop loss distance I removed as a persistent variable, so now it's only existing within the scope of this if statement. So we cannot access stop distance outside of this if statement, but that's okay because we don't need to. All we use stop distance for is to calculate our risk reward profile. So what we're doing here is we're saving our stop loss price into trade stop, this VAR variable. Now VAR variables do not reset on each bar, so this will persist across all the bars on our chart until it gets reset to NA. So once we've saved our long stop loss to trade stop, we then calculate our distance, stop loss distance. To do that, we use strategy.position average price. So that gets the average fill price of our open long trade, and we subtract our stop loss price. That gives us, let's say we went long on this bar for whatever reason and our stop loss was there. This code here will give us the distance from our entry price down to our stop loss in pips, or this number here. Once we have that, we can use this distance variable to calculate our reward distance by multiplying that distance by our risk reward profile, which is this first setting here. And then for our second target, we do exactly the same thing, but instead of taking in our first risk reward target, we take into consideration our second target, which is 2-to-1. So we have a 1-to-1 target to start with. Once that gets hit, we move our stop loss to break even, and the remaining position gets taken off at 2-to-1, unless our break even stop gets hit. So that's what this code here does. Next, we need to do the same thing for short trades. So exactly the same thing, but opposite direction. And I need to get rid of that historical operator. So we're checking if our position size is less than 0. If that's true, then we have negative contracts open, which means we are short. So if we are short and our trade stop is NA, which happens up here. So once we enter a short trade, our stop loss is set to NA. If we've entered short and we do not have a stop loss, we need to set one. To do that, we set our trade stop to short stop, which is this variable up here. These two variables are calculated on every single bar on our chart, but only saved to here once we have an actual entry signal. So once we enter short, we save our stop loss, we calculate our stop loss distance, and we calculate our take profits, our two targets, based on our stop loss distance. Same as long trades, except we're subtracting that distance instead of adding it. Let's save our code, make sure that compiles okay. So far, so good. The next thing we do, we're nearly done with this script. There's only 3 more things to do. The next thing to do is to exit our trades when our stop loss or our take profit is hit. The second thing to do is to handle our break-even stop. And the third thing to do is to draw all of this information onto the chart using plot functions. So let's do that next. The next thing is handling our trade exits. So let me explain what these 4 lines of code here do. The first 2 are for our long trades or long trade. We have 2 exits, exit number 1, exit number 2. Exit number 1 exits from entry. So the from entry is the trade ID that we want to exit. In this case of our long exit, we want to exit this entry. Both of these entries, only one of these will get executed depending on which market type we are on. If we're on Forex, this one will get executed. If we're not on Forex, this one will get executed. The only difference being our position size for Forex is calculated slightly differently. They both have an ID of long. So this line of code here will exit our entry ID of long if our limit, so limit is our profit target and it's a price value. You can also specify pips value. I like to work with price. It's a lot easier for me to wrap my head around when I'm coding. So I stick to price typically. So we have a limit order set at trade target 1, which is a 1-to-1 distance from our entry price. If our first take profit is hit, then we exit a quantity percent of I target 1. I stands for input. Target 1 is this parameter here, which is a percentage of our position, our total position size. By default, it's set to 25%, or a quarter of our total position size gets exited if our take profit is hit. If our stop loss is hit, it also exits 25% of our position. And then on the next line of code here, the remainder of our position would also get closed out if our stop loss was hit. However, this second line of code, this second strategy.exit call, long exit number 2, is exiting the same trade ID, same stop loss price, but the difference here is we set our take profit to our second target and our quantity percent is set to 100%. So this first exit, if our take profit is hit, our first target is hit, we'll exit 25% of our position. This second exit, if our take profit is hit, we'll exit 100% of our remaining position. So hopefully that makes sense. It's a little bit confusing, but just rewatch this video a couple of times if it doesn't click, and this will eventually make sense to you, especially if you play around with this code. Basically, we have one position open, but we have two exits. And then it's the same for short trades. If our first target is hit, we exit 25% of our position. If our second target is hit, we exit the rest of our position. Or if our stop loss is hit, all of our position is exited for a loss. So that's how we handle multiple targets in PineScript in the strategy tester. At least that's one way to do it. That's the way I thought of when I was coming up with this example script. The final thing to do is, well, the last two things to do, draw all of this information to the chart and handle our break-even stop loss. So let me paste in this code and explain what we're doing here. And I need a sip of water. I'm getting a sore throat from talking so much. This is a long lesson. So the comment here says, handle both long and short trade break-even stops. So we handle both long trade break-even stops and short trade break-even stops with this block of code. And we do this after our first position has exited above. And that's this first exit number one for long and shorts. If our position size is greater than 0, so we're involved in a long trade, and the current bar's high is greater than or equal to our trade target. So now before I continue, I've just sort of realized as I'm thinking about this, there's a problem with this line of code actually, in that it won't take into account slippage. If you turn slippage on in the settings properties here, this part of the code won't factor in slippage. So I'm thinking of a different way to do this. What I think would be better here, I'm sorry this is going to be a little bit confusing, but this is an afterthought after I've already written this code out. What I'm going to do instead here is I'm going to create a new variable here called var. Now I'm not sure, is position size a float or an integer? I can't remember. It's a float. So we're going to create a float value called trade size, and it'll be set to NA by default. And when we enter our position, I'm going to save trade size as strategy.position size. So let me save that for short trades as well. Now it doesn't matter what this value is. All that matters is that when we exit our first position, our position size is obviously going to change. It's going to be reduced. So instead of checking if price hits our first take profit, what I can do here is get rid of all of this code, and I can just say, if our current position size is not equal to our trade size, our saved trade size, which is the position that was originally opened, if this condition is met, so our current position size is not equal to what it was when we opened our trade, that means we have partially closed our position and we need to move our stop loss to break even. This is a much better way to achieve what I'm trying to do here, because that will, in theory, take into account slippage if this is turned on. So what we're doing here is we're overriding our trade stop value to our entry price, and we are setting our first target to NA. So now I can copy over my plot code, and this will draw all of the information to the chart. So we're drawing our EMA value, and I'm colorizing this based on whether price is above or below the EMA. If price is above it, the EMA will be green. If it's below, it'll be red. I am drawing triangle up and triangle down to identify long trade and short trade signals. And then I'm also drawing my stops and my targets. So if I have an open position, so my position size is not equal to 0, so it's positive or negative, then we are involved in a trade and I draw my trade stop. I also draw my first target and my second target. Otherwise, if my position size is equal to 0, we are not in a trade and we draw NA or nothing. So now watch the magic when I click save. We will now have, hopefully not a compiler error. And there we go. Although we do have an issue here, and our script is no longer taking any trades. And just after pausing for a moment, having a quick look at what was happening, what I need to do is move this new trade size variable. What I've done here is I've set it after we call strategy.entry, but our position size doesn't actually change until the next bar. So this function doesn't execute until the next bar is open. So what I need to do is cut our trade size from our entry code and put it into here, which checks on the next bar. If we're involved in an open trade and we don't have a stop loss set, then we set our stop. So if I paste that on the end here, that should fix our script. So let me save that code and make sure we're getting, there we go. Signals are being generated again. And we are pretty much done. We're drawing our data, our signals, our stops and targets, our EMA, our signal arrows. So this green and red arrow will appear on the setup bar, the bar before our entry, and then we will enter on the next bar's open. Our stop loss is set once we enter our trade. When our first target is hit, our stop loss gets moved to break even on the remainder of our position. So if I scroll up here, our position size is tiny, so something's gone wrong with my Forex code. All right, so now I'm going to add a Forex position sizing code to this script so that we can actually test this strategy on Forex markets while risking a percentage of our account balance. Now, the strategy tester doesn't allow this by default. We only have 3 options here: fixed contract, fixed dollar amount, and a percentage of your equity. Now, percentage of equity doesn't do what you think it would do. It doesn't, if I set this to 1, what this would do is if I have a $10,000 account, it will buy $100 worth of US yen. That's not the same as what we want. What we want is to risk 1% of our account on dollar yen, which means buying a significantly larger position size than $100. We need to use leverage in Forex. The reason for that is because Forex markets move in such small increments. So 0.5% move in Forex might be the average move on a volatile day. If you're trading 1% of your equity on a 0.5% move, you're not making much money. So I had to come up with a custom solution for Forex markets in order to achieve this. The strategy tester does not support this type of position sizing by default. Unfortunately, I really wish TradingView would add this in. It would make Forex traders' lives a lot easier. But for whatever reason, they haven't done that yet. So I've come up with my own solution. It's not perfect, but it is the next best thing. And it's a hell of a lot better than the options we have here. So I'll show you how I did that before I wrap up today's video. But before I do that, just to prove that this code actually works, or is at least highly accurate, I'm logged into one of my accounts here, my discretionary account. I have 9,500 real Australian dollars in this account. And I've set up my script so that if you look up here, my account is 9,504. And I've set my base currency in the strategy tester to Aussie dollars. So I've got my account balance in the strategy tester as close as possible to my real account balance. I've put on a position tool here on this latest signal. The signal of this MACD system was generated an hour ago. And here's my stop loss, my entry, and my initial take profit. If I right click this and click create limit order, and I set my risk to 1%, my position size is 0.13 or 13 mini lots or 13,000 units. If we look at the position size that my script has put me into this trade, with an account balance of 9,504, the script is saying that we should be buying 12,939 units, which is very, very, very close to 13 mini lots. And in fact, due to the fact that Global Prime only allow a minimum of 1 mini lot, this is just rounding up to the nearest lot size, or in this case, rounding down to 0.99. If you are trading through Oanda or a different broker that allows trading in units, you could have this exact position size in your lot size, your position size portion of the risk management calculator on TradingView. So anyway, all of that is just to say that this code is as accurate as I can get it. Again, full disclaimer, this code is provided as is. It's just for example purposes. There could be things I'm missing. It could potentially not be accurate. It's up to you guys to do your own testing to see if you're comfortable using this code in your own backtesting process. But with all that said, let's wrap up this video by quickly adding in this code that I'm talking about. So the first thing I've done here is I've set my base currency to US dollars in the strategy annotation function. That way, whenever we add a script to our chart, most of you, I imagine, would be trading in US dollars. If you are not, and you want to be trading in one of these currency pairs, or one of these base currencies, sorry, put that into your currency. So for me, I mostly trade US dollars, but my discretionary account is in Aussie dollars. So I would put AUD here if I was testing strategies with Australian dollars as my base currency. But for now, I'll leave this as US dollars, and I will scroll down a bit here and explain what this is. This is my custom library. It's public, it's open source. So if you want to check out what's in this library, you can go. I'll leave a link below if I remember. Otherwise, just Google Zen library or search it on the TradingView platform and you'll find it. It simply contains a bunch of my own sort of utility functions I use very frequently in all of my scripts. Any function that I use a lot goes into this library, and it just makes it easier for me to share code between indicators without having to copy and paste tons and tons of code. For this particular script, we don't use many functions out of this library, but we do use a few that saves a ton of lines of code in our script and just keeps it a bit tidier, keeps everything neat, which I'm a huge fan of. If you haven't noticed by now, I'm a little bit OCD with my code. I like it to look good, makes it easier to work with, less likely to make errors. So I import my Zen library here, and then I add one user input, risk per trade. And just to be consistent, that OCD kicking in again, I'll add I underscore so that I'm aware that this is an input parameter. And then I need to replace this. The easiest way to fix this in my script is just to save it and go through all the errors. And there we go, that's fixed. So I get a risk per trade amount. This is for Forex. So I'll add in here Forex risk per trade. Any other market that's not Forex, this will be ignored and will not be used. So this is only applicable to Forex markets. And then next up, I copy and paste a bunch of code that I use in all of my automated scripts that allows me to calculate my position size, particularly for auto view. If you're not familiar with auto view, I've done videos on that in the past. This code is primarily used for calculating my position size when auto trading through AutoView, which I don't do very often anymore. I use Pine Connector mostly, but anyway, that's outside the scope of today's video. What this code does is it calculates my position size based on the currency conversion rate. So if I were to change my strategy base currency to US dollars here, if you keep an eye up here, it's now tracking the US yen conversion rate. And that conversion rate is being taken into account when calculating my position size so that we get a more accurate reading on the position size. So I'm going to leave this here. I'm not going to explain too much more about this code. Again, disclaimer, I make no promises that this code is flawless. It is just code that has worked for me in the past. And I encourage you, and in fact, beg you to go and test this yourself before putting any real money at risk. So this block of code here will determine our currency conversion rate, which is used to calculate our position size. So now if I scroll down, the final thing I've done here is add this block of code to our long and short entries. So for our long entries, we're checking if the symbol type is Forex, then we calculate our position size. Using my custom library, this function here has a bunch more code in it, complex code that I won't go over in today's lesson. But in the library, I have this AV underscore get position size function. This will get my position size based on my current strategy equity, my risk per trade input, and my stop loss distance, and the currency conversion rate, if applicable. One other thing I need to mention here is that we are actually calculating our position size based on the closing price of our signal candle. So that's important. The way I've written this script, we actually calculate our stop loss based on the entry bar. So what happens is the script detects a setup bar, tells the strategy tester to enter long, in this case, on the next bar's open. And on that next bar's open, we calculate our stop loss, or we save our stop loss price. For our risk calculation code, our position size code, it actually works slightly differently. So it actually works off the closing price of our setup candle and whatever the stop loss price was for this setup candle. So this stop loss price may be a little bit different to the entry candle, not by much, but it might be a little bit different, just the way that the script is set up. The reason it's set up this way is because we actually enter on the next bar's open. And so to calculate our stop loss based on the previous bar's closing price might not be accurate because price might open down here and the distance from our closing price to our stop loss is going to be very different. Now, if you're okay with having a slight difference in your entry price based on the next bar's open, in Forex, that's not normally a big deal because there are very, very rarely gaps on intra-bar price action. Very rarely. On stock markets, however, there are frequent gaps. And so this becomes a bit of a problem with stock market strategies. If you're only using this script on Forex markets, I'd probably encourage you to take out this code here and move it into your entry code. So before your position size is calculated, you would take all of this out and paste it in here, for example, and then you could paste stop distance into here instead of using long stop subtracted from the closing price. And this would give you a more accurate, consistent reading for Forex markets. But because I wrote the script to be usable on Forex, crypto, stocks, it's a little bit more complicated calculating our stop loss distance because of the fact that our entry price is going to be different to our setup candle's closing price. And we won't know our entry price until the bar that we entered on. And so that complicates things in the strategy tester. What we could do here to keep it more consistent is I could copy this. It's going to make the script a little bit more complicated to read, but it should make it more consistent in terms of execution. I can paste all of that in there, copy this if statement, actually just this here. And I can say, and symbol info is not equal to Forex. And then this stop loss code will only be executed if we are not on a Forex market. And this code will only be executed if we are on a Forex market. Now, if I save this script, let's see if this works. I think it should, in theory. Not quite, because our average position average price is not known until the next bar after we have entered. So what I need to do here is change this to say close. So if I change all of these to say close, and I set this to NA, and this to close, 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 NA. Now the problem we're going to have is our trade size is not known until the next bar after our setup candle. So remember, all of this code here is executed on the setup candle, and on the next bar, our position is actually open. So trade size is not known until that next bar. So what I need to do now is add one more handle Forex trade size tracking variable. We need to say if siminfo.type equals Forex and strategy.position size not equals 0 and trade size is NA. Then we want to assign trade size to our strategy.position size. This way our break-even code will still work, because remember, our break-even code only executes when our open position size is not equal to the trade size that was opened initially, meaning we closed out a portion of our position. Now if I save this code, hopefully this should work okay. We should be entering positions again. I've made a mistake here. I need to indent all of these, this code here. Otherwise, as soon as this code gets executed, because this was not in the scope of this else statement, it immediately overrides our stop loss to NA, and then our trade never actually gets closed. So now this should work perfectly. Fingers crossed. There we go. That looks right. Here we go. Okay. So we're fixed now. Let's jump over to a stock market really quick to make sure that it's still taking trades there. There we go. So everything's okay. Here's some examples of the issue with gaps. So here, for example, if we had this setup candle occur on this bar, we actually wouldn't have entered our trade until the next bar is open. And that's a very different stop loss distance than this closing price. So that's something to keep in consideration when working with stock markets in particular. In a future lesson, I'll cover some ways to mitigate this issue, but this lesson's already long enough, so I'm going to wrap this up here. Let's jump back over to a couple of Forex markets and just see how this system performed. I flagged a couple of markets. It seems to do well on Forex markets. So here we have a 22% return with a 12% drawdown. Not too bad. US yen is even better. 38% return with an 11% drawdown, approximately, over 356 trades. Pretty good. That's not bad. We are on a 30-minute time frame, so we're not testing over years and years of data, just a couple of years of data. So not super robust, but still profitable, I would say, going forward. This strategy probably won't continue to perform this well into the future, but it's very unlikely to just suddenly stop working. And so there's a good chance this would continue to be profitable at least a year or two into the future, especially as market conditions remain as they are, with volatility being the way it is. Anyway, that's it for the Forex part of this lesson or the video. So here I have a watch list of the S&P 500. If I jump over to the first stock here and I change this to 100% of my equity. So now we're buying $10,000 worth of Carnival Corporation. And based on where our stop loss is or our take profit is determines how much money we win or lose. So on a percentage basis, on this particular trade here, we would have made, assuming our account balance was $10,000, which it wouldn't be here because we've already taken several trades. But if our account balance was at $10,000 on this trade, we would have made 2.5% on our 25% initial target. And then we will stop down for break even on our second position. Everything is all good. Open up the strategy tester, and now these metrics are a lot more accurate. They'd be even more accurate if I added in commissions and slippage. So let's do that now. For interactive brokers, I get a commission rate of about 0.005 cents per contract. So I'll leave that as that. Slippage, you can play around with this yourself if you want to. It's probably worth doing. Let's set it to 10. So that's way too much. Let's set it to 1 tick. Let's see what that looks like. That's a little bit better. That's probably more realistic. So now we're getting about a 1 point slippage, or 0.1% on this particular market slippage on our exit and entries. So when we enter a trade, we get a 1 point worse price than we should be getting. Sorry, we entered here. So we get a 1% worse price, or 1 point worse price on our entry due to slippage. That it's not perfect. You won't get slippage on every single trade. It won't always be a fixed slippage amount, and sometimes slippage works in your favor. And when your take profit is filled, you might make more money than you were hoping to. Usually it doesn't work that way. Usually you lose more money than you were hoping to. But that is important to include in our backtesting. It gives us a more accurate representation of the strategy's performance, at least on historical data. Now, as I mentioned at the start of this video, this lesson is not intended to be a trading lesson. I'm not encouraging you to go out and trade this system. This is purely for demonstration purposes only, just to show you how to achieve certain things in PineScript. In today's lesson, that is how to combine several indicator conditions. We didn't have any candlestick patterns in this lesson. It was quite a simple system, but I've covered plenty of candlestick patterns in my previous lessons if you want to go and check them out and maybe even add them. Candlestick pattern confirmation to this script to see how that affects the performance. We've also demonstrated, importantly, I've never done this before on my YouTube channel or in my courses for that matter. I've demonstrated how to take multiple targets in the strategy tester. So we've taken a partial position off at 1-to-1 and now full position off at 2-to-1. I did include these as user inputs. So if I come up here, you can change how much of your position is closed at our first take profit. So for example, we could take off half our position. I can get rid of these two inputs too. I was playing around with them for my Forex trading experiment. But yeah, now we can take off however much we want to. We can take off half our position and see how that affects our metrics. In this case, it didn't improve them at all. Let's try taking off 75%. That didn't change much either. I'll leave it as 25% for now. And let's jump through a few markets here, because I did flag a few that this strategy was surprisingly quite profitable on, which I didn't expect. If I scroll through here, you'll see that many of these markets are not profitable, which is why I say not to go out and trade this stuff blindly. Go and do your own testing. In this case, I made a 40% return with a 30% drawdown, pretty rough drawdown. But remember, this I'm not trading advice, but if you were to trade a system like this, it should be part of a portfolio of markets, potentially time frames, and you would usually have multiple systems in play. And so something like a 30% drawdown on one market might equate to a couple of percent on a portfolio basis. So keep that in mind. This is if we were to trade this market solely with 100% of our capital. These are the returns we would get, theoretically. This includes my fixed commission. It doesn't anymore for some reason. It deleted my commission rate. That's fantastic. Let me add that back in. And let's cycle through some markets, see what we get. ROST was quite profitable. Here we go, 61% return over 382 trades with a approximately 43% win rate. So 43% of trades closed for a profit, and a 13% max drawdown. Pretty solid. Would not expect that to continue into the future since it's a single market, and single markets tend to change their behavior over time quite significantly. Depending on the market capitalization, a penny stock is going to behave very differently when that same penny stock becomes a blue chip stock over a period of 10 years or so, or if that were to happen. So keep that in mind. This is not a robust testing process I'm going through, just demonstrating some of the results here. So there were a few markets here that were profitable. Adding in commission costs did significantly change the profitability of some of these markets. If I get rid of the commission cost and slippage, the returns are quite significantly different. This one's now returning 100% with an 18% max drawdown. If I add in commission costs and a little bit of slippage, that is completely nerfed to 34% max drawdown and 36% return. So that shows the importance of adding in commission costs and slippage, especially on lower cap stocks. Stocks with a smaller price are going to attract much higher commission costs and also slippage due to the reduced liquidity typically in these lower capitalized stocks. So keep that in mind. But yeah, very interesting system here. Align Technology performed quite well with this system over the past couple of years. 24% max drawdowns, not bad. Not bad if this was part of a portfolio of markets and systems. It could have been a nice money maker there. Anyway, this video is long enough. I hope you found it interesting, first and foremost. The script itself is pretty interesting. It's a good sort of template, especially if you are the type of trader to take multiple targets. This is a good base template to cut out what you don't like and paste in what you do want. And specifically this section here and the 2 targets should be enough for you to go out and test multiple target systems if that is something you are into. For now, I'm going to wrap this video up here. I need to go and get myself some dinner. I started this video much earlier in the day, but 3 coffees later and several hours later, it's done. I hope you enjoy it, and I'll be with you in the next lesson. As always, best of luck with your trading and take care. Goodbye.